And it's basically kind of getting familiar with the cycle. We really spent a lot of time on these two, on journal entries and the financial statements. And then these two are the kind of the ones that we're doing in chapter 4. And this is kind of to link the journal entries to the financial statements. Again, the journal entries are just recording transactions quickly. It's a real weird shorthand. You take the 2 or 3 accounts, whatever you need, put the dollar amounts in, either debits or credits, and you're done. And then the financial statements, this is what basically everybody sees. So if a manager, say in a company, manager at Ford would not see all this stuff, but they would see the financial statements. So everybody's going to see the financial statements, whereas this other stuff kind of goes on in the background to make up the financial statements. Okay, so today, oops, not that. So this is going to be similar to what we just did, last class. Just so you know, it's going to be the same type of thing. So we have the journal entries, and again, they're already made for us for this chapter. We know how to make journal entries, so this is that step's already done. That's kind of the hard step, actually. The journal entries are the hard step. The posting of it is kind of mechanical. So what we're going to do is post these. They're called posting from here over to here. And the reason we're doing this, you might say, why are we doing this? We're doing it because you can't tell how much is in the account by just these individual transactions. Looking at these, you cannot easily tell how much is in the cash account. There's cash here, there's cash here, there's cash, whatever. So, I didn't mean to do that. There we go. So that's why we're doing it in this general ledger. We need to get it. By the way, in case you're wondering why it's called the general ledger, again, journal entries, they don't look anything like journals, but it sticks around. The ledger, the general ledger, or something that's called the ledger, was a big, thick book because they had all the accounts in them. They didn't just have the transactions. Transactions was doing these little journals, and they would bring them over and put them into this big giant book that had all the accounts in it. And where was the book? It wasn't on somebody's desk that was too big. It'd be on the window ledge. We call it a ledger because it would sit on a window ledge. So anyway, kind of a weird term, but the ledger that's what it comes from. So and it's there to have all of the actual balance in the accounts. The actual balance in the accounts would be all there. And again, the journals would be just a list of transactions that happen. So, again, this stuff goes way back. It's all, most of it's on computers nowadays, but they still call it those same things that are still hanging around for 400 plus years. Okay, share my screen. Okay, so here we have the general ledger. I think of a way to make these look a little more. Yeah, that's probably not going to work. Okay, I'll just go through. Okay, so we'll start posting these over. And again, all we're doing is taking each of these transactions and putting them over here into the T accounts. Now, if it's a debit, debits are on the left, so this will be on the left. And credits are on the right. So anything that's a credit will be on the right-hand side. So for this first one, we have cash. How do you make these? Let me try something. Okay, so cash would be 3,000. And this would be like if you start a business, the first thing you'd have to do is have owners, and then you, for a company anyways, and you would first issue the stock, so you have owners, and then start doing business. Okay, common stock was 3,000 also. Okay, let's go to cash and revenue. Maybe run out of colors here. Make that one green. Okay, so cash, it's 900. Revenues is 900. Expected revenues are 900. Drop my pen on the floor. Okay, so we're just gonna do this for each one of these. And again, this is called posting. Okay, so we'll see this one, make this one blue, say. Okay, utilities expense. Accounts payable. Okay, equipment. All right, let's see, let's get accounts payable is a debit. So it looks like we paid off accounts payable there. And again, if if you already know how to do this, you get the gist of it. If you want to work ahead, that's fine. You don't have to stick around. And I'll post the check figures. I'm gonna go ahead and go through the whole thing, obviously, but if you already get it, there's no, I'm absolutely fine with that. Okay, so depreciation expense and accumulated depreciation. I did that wrong. Let's try that again. This is depreciation expense. I was teaching you what not to do. Don't do this. Don't be a me. Okay. So accumulated depreciation will be, depreciation expense will be the debit. Accumulated depreciation will be the credit. And we talked about this last time. If these two accounts kind of go together, hey, that doesn't look very good. But anyway, these two accounts, yeah, I know how to do it. We'll do it like this. So the actual value of the equipment is not that. It's something less than it. So, okay. Yeah, it was kind of faint. All right, so supplies. $270. And cash, $270. Supplies expense, and this is when we actually use the supplies. Okay. So this one is a little bit, well, we haven't really covered it. So this will be 203. And so these are the supplies that are used. So just to reiterate the supplies. So when you first buy the supplies, they're an asset. As you use them up, then you expense them. So there's still will be some left over here. I think we had 270 supplies. We used 203, so there's 60 whatever left over. So the expense comes from when they're used up. So it actually isn't cash going out like a normal expense, but it's when we use up the supplies. So if they're envelopes or paper or brochures or whatever they were, when they left, that's when we expense them. Initially, they're still an asset. Okay. So these are the ones we use. So we still have some supplies left, and we'll figure that out later. 67 maybe. Okay, all right, so continuing on. Okay, wages expense. It's hard to find colors you can actually see. Okay, use that one. Okay, so insurance expense. We'll start reusing some of these. So cash and revenue will make as a go back to green. All right, so 315. Prepaid rent. Okay, unearned revenue. The liability. Put that in here. Okay, so it looks like we've earned $18 of that. And again, this was a liability, so it's no longer a liability. We earned it. We earned 18 of it here, it looks like. So we're gonna put that up with our regular revenues, saying, okay, we earned $18 of it. Okay, rent expense and prepaid rent. Let's make that. We'll make that orange. Okay, so prepaid rent is and the rent expenses are always debits. All right, so I think that's it, right? And by the way, this is prepaid rent is an asset. You're paying something ahead of time. And as you use it up, it becomes an expense. And that's going to be a theme that we're going to go over, by the way, in this class, and especially in chapter 3, that as something is used, it becomes an expense, and it doesn't really matter what it is. As time goes on, a lot of times it'll use it up. So, like the equipment, it might last for 10 years. They say, okay, you used up part of it in each year, so that's where that depreciation expense comes in. So as you use it up, you expense it. It goes into expense. Even though it's not necessarily cash going out, it is that item is being used up. It could be, like say for equipment over 10 years, it could be supplies that maybe you'll use them up in a week. But whatever it is, as you use them up, you expense them. Okay, well, I think we got everything. By the way, if you're ever wondering if you do I have everything in there? One thing you can do is count up how many numbers you have, and then count up and see sure you have that many numbers in the general ledger before you start, totaling them up. Because there should be, for each one of these, each one of those numbers should be in here somewhere. Okay, so let's do the hard one first. Okay, so we have switch cameras here. Oops. All right. So I'm just going to add up the cash. $42.60. Here. $2,794. By the way, if you're getting different numbers, let me know. I'll for minus. Okay, so I think 1,000. 466.
Yes.
Yeah, okay, good. Thank you. I'm going to circle that. All right. Okay. So that is a total cash. And again, looking at the journal entries, you really don't know how much you have in cash. You've written them down, you know what the journal entries are, what transaction happened, but you really don't know what the balances are. So that's what we're doing here. We're getting the balances. Okay. Here. All right. So some of these we still have to add up though. Should be able to do that one in my head, but. $12.33. Go up. I don't know, is it there? Okay, and these add up to oh, it's not letting me do that. Oh, I know why, because I put that stupid space in there. That's why. Okay, so 2884 minus 1125. 1759. Down here, 45 minus 18. 27, right? That's not what I want. Did something bad here. Okay. All right, down here. Uh, 67. Oh, come on. 86. Better put it in the calculator. And you don't need to put this in, but retained earnings has 0 in there because it's our first year. We couldn't have retained anything from last year because there is no last year. All right. Question on that? Okay, well, let's go ahead and do trial balance. Okay, so now we know the balances in each of these accounts. But we want to make sure that we didn't do anything crazy. Oops, like that, like I just did. Okay. So what we're going to do is put all these into the trial balance. Now, that's not me, that's a dog with a calculator sitting on top of it. The trial balance is just debits and credits. That's all it is, debits equal credits. The totals at the bottom don't mean anything except that the debits equal the credits. So some people had the question of, well, gee, the balance sheet doesn't match up with these totals at the bottom. It's not going to. This is just a list of debits and credits. You know, just taking the debits and credits and making sure they equal. That's all it is. Now we're going to use that for the to make the financial statements, but the true beauty of this thing is that it will catch errors, and if the trial balance doesn't balance, the financial statements won't either. So that's one of the reasons why I add this, and this goes back, you know, hundreds of years before calculators. Calculators are actually a fairly new invention. I mean, we're not talking about like hundreds of years ago. We're talking about, you know, in the 60s is when they really started having people that actually had ones that you could actually use. Here's something interesting. The CPA exam didn't allow calculators. When I took it, we weren't allowed calculators until the 90s. And you say, well, okay, that's this weird accounting thing. In the accounting classes, they generally didn't let you use calculators. So, you know, it was a different time. You couldn't use a calculator in an accounting class, but thankfully nowadays we are a little bit more enlightened, and we do allow calculators in classrooms. Okay, let me try to make this one kind of this bigger. You know, I'll probably goof it up if I make it bigger. Okay, so cash would be a debit of 1466. 67. Accumulated depreciation is going to have a credit amount. Now we're just going to add it up with the credits. On the balance sheet, we're going to subtract it, but for the debits and credits, we just add it up with all the other credits. Okay, let's see. That's payable. Okay, I think that's it. I'm gonna count them, just make sure. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. All right, so $63.94. Hopefully, unlike last class, hopefully I'll have the same thing over here. $6,394. Hey. And again, this is just debits equal credits. And again, these numbers are just the totals. These will not appear on the financial statements. I want to show you something about this, just someone as an aside. I gotta go back to a different handout though. I can do it on this one. Yeah. Especially in some of these chapters, I ask you what the normal balance is in an account. And the normal balance is generally going to be whatever has a plus by it. For a contra account, it's a little bit different. But whatever has a plus by it will be the normal balance. So for instance, let's take expenses and dividends. They're on the plus side, they're a debit. If you look at what we're doing here, all these expenses, they're all debits. Okay, let's take assets. Generally speaking, they're going to be a debit. The contra accounts are going to be the opposite. But for the assets themselves, these are all the assets, they're all debits. Why? Well, I mean, you could have zero equipment, but you couldn't have negative equipment at the end of the period, right? You couldn't have negative 500 equipment. You could have zero equipment, not have any. But so generally speaking, coming out of this thing, just kind of tie this into it. Wherever there's a plus, again, unless it's a contra account, wherever there's a plus, that's the normal balance. That's what you'd expect to have. Okay. Well, from this, we should be able to make our Make our income statement. Okay. So income statement, we have revenues. 1, 2, 3, 3. I'm just going to kind of highlight these as I go along. As I put them in. Okay, so we got that. The revenues are in there. If you want to be lazy like I am, and I'd encourage you to be lazy like I am, I'm going to copy those expenses. And just to show you how incredibly lazy I am, I'm going to also copy the dollar amounts. I always try to show the students an important skill, and being lazy is an important skill. So, all right, you can use it. You can use it in any class, actually. All right. Oh wait, I don't have my calculator cam. $208. No, you guys got?
Yes.
Yeah. Okay. I'll stop. Okay. Retained earnings. Now, retained earnings are going to be a little bit be easy in this case because there's no beginning retained earnings. There are no dividends. We do have this net income. And that's going to get added.
Are those negative numbers?
Yes, because the expenses are going out. So this is what's coming in are the revenues, and these are what's going out. Now, you don't, if you leave them as regular, as long as you subtract them, that's fine. You know, if as long as you subtract out the expenses, that's fine, but don't add the expenses in because the revenues are money coming in and the expenses are money going out. If you don't put the minus in front of them, I'm not gonna, you know, that's fine. But as long as you subtract them, as long as you get the income of whatever it was, 208, as long as you get this for the income, you know, it's fine. So if you don't put the negatives in there, that's fine. I put them in there just to kind of remind myself that that's money going out. Oops, wait a minute. Okay, same net income now. We have dividends declared. We didn't have any. If we did, we put them in there. Those would be minus. We don't have any. So this will be our, I'll put it down here, ending retained earnings. It would just be the 208. It made 208 of income. Income and the earnings are the same thing. I should put that in here. Income and earnings are the same thing. So net income and earnings. So retained earnings just means retained income. It's income they didn't pay out yet. So this will actually be the same. Let's make that. It's a little darker. The hardest part about accounting is the color coordination. Okay, so so retained earnings is really just retained income, and you really see that here. How much of the income have they retained? All of it. And they haven't paid out any dividends, so they still have all of it in there. Okay, let's go to the balance sheet. Be very lazy again, yet again. Okay, so we have that. Now be careful because the accumulated depreciation is going to be negative. That's because that's a contra account. And then again, I think I mentioned this before, but those oh, that looks worse. All right. These two go together. I know. Like there we go. So those two go together. Okay, so let's see what the total is here. And by the way, because our trial balance, we know that this should balance too. $4,994.
Yes.
Yay. Okay, so now liabilities. The liabilities are whatever that is. $1786. And equity is going to be common stock. It is not spelled like that. $3,000. Ending retained earnings. And these two together, let's hope, come out to the right number. Hey. So these two have to equal, and they do. And really what it's saying is, okay, you got 4,000. Okay, we got 4,944 of assets. How did we get them? We borrowed 1,786. The owners kicked in 3,208. And I'm going to mention one more thing, and then we'll go. When it comes to the financial statements, the income statement, statement of retained earnings, and balance sheet. Now, the income statements for a period of time, for instance, a year. So 2021 will have, what were the revenues in 2021? What were the expenses in 2021? How much income do we make in 2021? So revenues and expenses are all for that period of time. How much money do we make in that period? Okay, well, an obvious question is, what happens when 2021 is over? Right? I mean, when it's over, what's going to happen to 2000, when we go into 2022, what do we do? And the answer to that is, I'm going to go back up to, so this is the trial balance. All of these accounts down here, hey, what's going on here? A little formatting to do here. All of these accounts will get closed. Now, the stuff that's on the balance sheet will not be closed. So this stuff down here, ha. Okay. So the revenues, say, for instance, for 2021, will be closed when we go into 2022. We're going to start new in 2022 and see, okay, what the revenues were and all that kind of stuff. So if you're wondering why this trial balance, why they have all the balance sheet stuff first, these are the accounts that will still be hanging around after the end of the year. When we go from 2021, December 31st, we wake up on New Year's Day, January 1st, the cash is still going to be the same. It'll be the same it was the night before. It'll be the beginning amount, right? And all this other stuff will still be there. The equipment will still be there, the whatever, buildings, land, all that stuff will still be there. We will just start over new with the revenues and expenses. So these will be closed and starting a year. So for example, I can't type for beans. So for instance, we close 2021 and we start 2022 with 0 balances. So these will all be closed out to 0. We're not going to do it right now, but just give kind of heads up. That's what's going to happen. And then these balance sheet stuff on the balance sheet sticks around. From year to year, you'll have cash, supplies, equipment, all that kind of stuff. But these revenues and expenses will close out to 0. We'll start a new year. Say, okay, how much income are we going to have in 2022? Starting a new year. Question on that? Okay. Well, I will put a drop for this in the submit assignments here. I'll also post the check figures in the handouts account. But any question on this? You're going to have one of these on the test. Just so you know, you probably assume that, but you have one of these on the test, and we're also going to do another handout next class. There's going to be 3 handouts for this one for the classified balance sheet, but we will worry about that next week. Any questions?
When is the next exam? Next week, Tuesday or Thursday?
It won't be. Let me think. I'll probably send it out on after next class. Yeah, because next class we're going to do the classified balance sheet. So I'll send it out after next class.
Would you quickly show the note you added for the closeout? I just wanted to make sure that I was interpreting it correctly.
Absolutely. And again, we're not going to do this. And for this chapter, we're not going to close these out, but this is what you would be doing, is closing those out. Putting them back to 0. You just reset them. And by the way, how do you close them out? Well, if revenue has a credit balance, you close it out with a debit. So it's a journal entry that goes in and closes all these out. And what would happen is, now you're probably saying to yourself, well, wait a minute, if we close all these out, it's not going to balance down here. Well, you notice that the net income was 208, was it? I think it's 208. That will be in the retained earnings account. Close it out to retained earnings. We're not going to do it, but for right now.
Scroll up a little, or I guess down.
Oh, I'm sorry. Yeah. Yeah, so like if you're going to close 2021 and say, okay, 2022 will start over. And sometimes you'll see these up here will be called real accounts. You guys don't need to know this, but right now, anyway, real accounts and nominal accounts. I don't know if it even matters. Kind of definition-y stuff. Fodder for multiple choice questions, I guess. Okay. All right. Question on that? Okay, so I will go ahead. Let me save this. I'll go ahead. I'll make a drop for this. I'll also make a drop for. So what do we have? Let me look and see what I have in here. By the way, your grade to date is in your in the grades account, and it's only for chapter 1 though, because chapter 2 stuff isn't due yet. Did I put a chapter? I did not put the one for last class. I'm sorry. Well, you guys don't need to watch me do this. You guys got stuff to do. All right. So I'll post that right immediately after. I'll post the drop for the chapter 4 handout 1 and chapter 4 handout 2. Any questions?